Hi, my name is Ryan Clark. I am founder and CEO of Clark College Funding and also author of the book College Aid for Middle Class America, Solutions to Paying Wholesale versus Retail. And today I'd like to talk to you about the 10 options to consider if you can't pay your student loan bills. And this is an extremely important topic today, whether your son and daughter is in high school or whether they're in college or whether they just graduated. We all need to understand the pressure and the burden that follows when you take out a massive student loan debt. And there's currently $1 trillion of outstanding student loan debt today. So I've come up with the 10 options you should consider if you can't pay your student loan debt. And we're going to talk about each one of these options. So number one, we're going to talk about know what you owe. Number two, know what you're working with. Number three, postponing that payment with a deferment. Number four, extending those payment plans. Number five, how to choose a graduated repayment plan. Number six, base your payment on your income. Number seven, how to consolidate your loans. Number eight, postponing the payment with a forbearance. Number nine, have your debt forgiven. And number 10, being proactive. So let's talk about number one, know what you owe. Very, very important. First thing you need to know is what's the total amount of student loan debt that you currently owe. And what are my payments? What are my monthly payments? And where do I need to send them? Very basic, but you'd be surprised how many people just don't know that information. And when you leave college, you should go through what's called an exit interview where the financial aid office gives you all the information about your loans and a complete breakdown of how much the payments are and where you need to send those payments. And if you don't have that paperwork, that's okay. You can go visit the National Student Loan Data System, and you will retrieve all your student loan information. Now, if you do have private loans and you don't know where to go or who to contact, that's okay too. You can go get a copy of your credit report, and of course the company will be listed right on your credit report, so you'll know where to go to formulate the total amount, your monthly payments, and where to send your monthly payments. Number two, you want to know what you're working with. Do you have just private loans, or do you have just federal loans, or do you have a combination of federal and private loans? And if you do have federal loans, what kind of federal loans do you have? Are they Perkins loans? Are they Stafford loans? Are they unsubsidized? Were they subsidized? And just so you know, most federal loans, the Stafford loans, the Perkins loans, for example, are fixed interest rates loans, and they have really good repayment plans, very, very flexible repayment plans. And we'll discuss some of those today. And then if you have private loans, which essentially are non-government backed loans, meaning from a private lender, a bank, credit union, usually those loans are with variable interest rates. Not often, not always, but most of them are variable interest rates. And they tend to have less flexible payment options as well. So if you just have private loans, that's okay too. All is not lost. You just need to contact your lender immediately if you're having trouble with repaying back your student loans. Okay? Postpone payment with a deferment. What is a deferment and can I qualify? Well, the place you need to go is asa.org, and it's going to list all the different types of deferments that you may or may not qualify for. So, for example, you might qualify for an unemployment deferment or extreme economic hardship deferment, or if you're enrolling in school at least half time, or if you're an active military personnel, you're going to active military duty, you might defer your student loans as well. So let me talk about the unemployment deferment for just a minute. Unemployment deferment, you have to work at least 30 hours or less. So you're currently working 30 hours or less, and you're actively seeking full-time employment. Now you're going to renew this deferment every 6 months, and you have a maximum of 36 months to take this deferment. If for some reason, again, you don't qualify, make sure you talk to the company that collects your student loan payment. You might find some different options. Number four, extending your payments. October 7, 1998 is an important date. So if you have at least $30,000 in loans, in federal loans, and you got those loans on October 7th, 1998 or after, you can extend your repayments anywhere from 10 years, which is the typical amount of time, all the way up to a maximum of 25 years. Now, if you extend those payments over 25 years, of course, you're going to be paying a lot more interest over that time. So you're probably going to increase the cost of the loan. But at the same time, the interest, the smaller payments over a larger period of time might make it easier for you to do. So certainly look into that if you do qualify. Number 5, choose a graduated repayment plan. Now this works really well if you're currently graduated, you took a job, and you're not making a lot of money today, but you think in a few years you're going to be making a lot more money. This might work really, really well. So this is very good because you're not extending the repayment period. You're just needing a few years, if you will, to get to that point in your life where you're making good money. So this type of repayment plan, it lets you pay interest from anywhere from 2 to 4 years. So you're just paying interest, if you want, on your loan for from 2 to 4 years. Now after that, payments of course are going to increase because now you're still going to pay over a 10-year period, but you're paying not only interest, you're also paying principal. And that interest, again, has accumulated. So that goes into the calculation. So make sure you understand what those larger payments are going to be the years following. Now, again, graduated repayment plans can increase the total amount of interest that you pay over that 10-year period. Number 6, base your payment on your income. There are 2 different types of repayment plans. Number 1 is the income contingent, and number 2 is the income based. Again, these are based upon your direct Stafford, federal direct Stafford loans. And essentially how they work is that your monthly payment is calculated on a percentage of your discretionary income and your family size. Now again, to qualify, you have to have some type of financial hardship. And remember, you're still responsible for the interest that builds up over the length of the payment period. Now what's interesting about this loan, if you're repaying this loan over 25 years and you still have some outstanding balances, let's say you still have $10,000 left on a loan and it's been 25 years. After you've paid this loan for 25 years, that $10,000 outstanding balance will be forgiven. So that's an interesting little caveat with this payment plan. Number 7, consolidate your loans. Now, if you have multiple student loans, let's say you took out a federal Stafford loan every year that you're in college, you might have 4 or 5 different student loans, and you might have 4 or 5 different interest rates. So it might make sense, instead of paying 4 or 5 different loans and writing 5 different checks out, is to consolidate those into one loan, especially again if you have different interest rates. One are really low, some are really high. You can combine those into one consolidated interest rate. Now, if you have a federal family education loan and you have a direct loan, you can consolidate those together and make payments. Again, I'm not going to go to the definition of those 2 loans today. That's a different discussion, but understand that you can consolidate those into one loans. Now, the standard repayment is set at 10 years, but you might be able to extend it up to 30 years after you consolidate. Now, once you consolidate the loans, you can't reverse them out, right? So once you do it, that's it. But if you do go back and get some additional student loans, let's say you're going back to get your doctorate degree and you're taking out more loans, federal loans, then again, you can consolidate those as well. And what's interesting, if you're currently a student in college today, you have until May 30th of 2013 to consolidate any loans while you're still in school. So if you think that might be an option for you, if you think you'd like to at least consider doing that, talk to someone in your financial aid office at your school and see if it's right for you. Number 8, postpone payment with a forbearance. Now, if you don't meet the criteria for any deferments that we just talked about, you still may qualify for a forbearance. And a forbearance is mostly granted solely at the discretion of the company you make the payments to. So essentially, the loan company has the right to say yay or nay with a forbearance, and it's really reserved for special cases of financial hardship and of illness. But again, you need to ask for help, and you'll be surprised how many times they say yes. Now, please remember, all the interest that accrues is added to the principal balance of the loan. So you're not getting away with not paying any interest. It's just you don't have to pay it for a certain amount of time. The interest is accruing, and it will be added back into your loan balance. Number 9, have your debt forgiven. Now, wouldn't that be good? If you're going into the teaching profession, if you're going into public service, there are some options that are available to you to forgive part or all of your federal student loans. Now, there are different types. There are different teacher loan forgiveness programs, and there's some available from the type of loans you took out to where you teach and what subjects you're teaching. So all of those different things may or may not qualify you to get your loans forgiven. So you need to look into the details. Now, if you go to public service as well, there's some criteria that you need to meet to be able to get some of your loans or all of your loans forgiven. Number one, you have to be a full-time public service employee, and you have to make 120 qualifying payments on your loan currently. So you have to be in good standing. You can't have defaulted on your loan. And once you do that, you might be able to get your loans forgiven. Pretty neat. Now, if you have a federal family education loan, again, you can still qualify by consolidating this into a direct loan. So don't be alarmed. Number 10, and this is the most important advice I can give anyone in this particular situation if you can't pay back your student loans, is to be proactive. You know, again, the worst thing you can do is to ignore the problem. You have to face it head on. And there are many federal programs that can help you, and often private lenders are really willing to work with you for a solution. They all want you to succeed. They all want to get their money. They all want to work with you to make sure everyone wins. So the first thing you need to do is contact the company that you send your student loan payment to and be frank about your situation, be upfront, lay everything on the table. Ask them for all the repayment options to consider, and do whatever you can to avoid being delinquent or being default. Because being proactive early and allowing them to work with you very early in the process gives you a number of different options, and it will certainly protect your credit rating. Well, I hope you enjoyed the information. I hope you found it very, very helpful. If you have some more questions, feel free to email me or put comments below, either in YouTube or on my blog, and I will try to answer them as I go. Well, thank you very much for listening to me, and let's make college an affordable reality for everyone. Have a good day.